Hey everyone, Mark Galashevsky here, speaking to you on April 1st, 2020 in the wake of the March 2020 lows in global stocks. When anyone asks me why I believe that financial market trends are non-rational and that they ebb and flow in patterned waves, the first piece of evidence I present is the MSCI Emerging Markets Index. That's because this index represents the sum total of the daily moves of about 1,400 individual stocks from 26 nations. These stocks are denominated in almost as many currencies, but the index itself is denominated in US dollars. Why is that significant? Because amazingly, despite being a composite of so many disparate financial markets, the index has fit perfectly inside a trend channel for over the past 30 years. I ask you then, how could such technical precision even be possible if trends in each of the 1,400 stocks are governed by the individual decisions of corporate managers in 26 different nations, the pronouncements of national and local government officials, and other random news events? The answer is, frankly, it's impossible. The logical conclusion, therefore, is that financial market trends must be non-rational in origin and follow some pattern logic. While analyzing patterns in financial markets is interesting and a lot of fun to do, the exercise becomes even more interesting when you begin to look at headline news events through the lens of the stock market. That's what socionomics is all about. Take, for example, the three most prominent infectious disease outbreaks over the past 20 years. SARS, which originally broke out in Hong Kong, swine flu, which broke out in Mexico, and COVID-19, which broke out in China. Because I've trained myself to view mass social events through the lens of the stock market, I can't help but notice that the three diseases went global after major declines in the MSCI Emerging Markets Index. That timing suggests a relationship between bear markets and infectious disease. What's more, the first two diseases went global toward the end of major bear markets, SARS in late 2002 and swine flu in early 2009. And after both times, emerging market stocks soared. Could it be a random coincidence that COVID-19 has now gone global just as the MSCI Emerging Markets Index again dipped precisely to the lower line of its long-term trend channel? Sure, it could be, but I seriously doubt it. Instead, I think that both the emergence of the disease and the timing of its spread globally is one more example of non-rational forces acting on human society, just like the patterns in stock markets. You can probably already guess what my forecast is for Asian and emerging market stocks based only on this simple trend channel analysis and the timing of past epidemic diseases. Be sure to check out the April 2020 issue of Asian Pacific Financial Forecast or Global Market Perspective because I present a lot more evidence to support that forecast. I hope you enjoy it and find it useful as well.